If I buy a property and I know that I can increase that net operating income, I can force appreciation completely irrelevant of what's going on around me. I don't need, it doesn't matter what happens to the broader market or the broader economy. All else being equal, I can increase the value of this apartment property simply by fixing things inside the business, by increasing revenues and decreasing costs, one or the other or both. And I can raise the value of that property because again, everything is valued on that net operating income. So if I can increase the NOI, I don't need the neighborhood to get nicer. I don't need the city to expand. I don't need anything else to happen for my property to increase in value. I just need the NOI to go up. And then I've increased the value of my property. And obviously there's more variables and it's not always that simple, but forced appreciation is something that I'm gathering more control to what I can impact. And I don't,
Right.
whatever Apple's doing doesn't, their fourth quarter estimates and their full year estimates being decreased, lowered, and that sinking the NASDAQ doesn't impact me like it would an individual stock. And
Right.
that's the
Right.
difference is it puts more control in the hands of the investor. And that's one of the huge reasons we like it so much.
Right. Yeah. No, there's no issue. There's no instances where, for instance, a company beats expectations on earnings, but then recalibrates what they thought they were going to make next year from what they thought earlier that they were going to make next year. And what they think now is lower than what they thought they were going to make. So even though they're making more than they thought, they don't think they're going to make as much as they thought earlier. So now everyone bails.